Morning, everybody. Welcome to the Flow Show. So for today, had to get the stream up and running, so it's all working. And what's going on in markets as well. So busy start to the week, and no doubt it's going to be another busy week. Anyway, morning, Kay. You all right?
Yeah, morning, Ryan. Yeah, we're good. Ready to start the new week.
Absolutely. Well, I don't know how ready we are, but we're going to start it whatever happens. Right, before we get into the news, just another reminder to sign up for our coming soon page. Give us your get on our newsletter list, find out what's coming up over the months ahead. If you get on that list, you will be automatically entered into a prize draw for a trader funding account. So get in there quickly, find out what's coming up, and some of the changes we're going to be making are going to be big. Right, let's crack on to the news and whatnot. Just keep an eye on markets at the moment, see what's going on. Keeping half an eye on what's going on. Right, just before we get into the real super nuts, we'll go through all the rest of the headlines. China is hoping to expand the size of trade it does with New Zealand, which at some point might be a bit of a booster for the Kiwi. Not right now, though, but it could be something that influences later on. A little bit of a problem for PM Ishiba ahead of the summer elections. They had they called it an assembly race, which is more like a local election thing. And the LDP party, Ishiba's LDP party, came in. They won, but they came in with a record low amount of seats in that race. So things not looking good on that front. Maybe Ishiba needs to up the amount of cash handouts he's going to be needing to dosh out to bribe the voters. We shall see what happens with that. A bit of data out this morning. It's PMI day. I forgot it was PMI day today, given all the other headlines and whatever. So start off in Australia, where manufacturing stayed unchanged, but services ticked up nicely to 51.3. Over in Japan, also manufacturing moving back into expansion, and services also ticking up nicely too. Coming across to Europe, France still well in the doldrums. Saw manufacturing going backwards, was expected unchanged. It dropped 2 pips instead. Services as well, also going backwards by 2 pips. Was expected to improve a bit. Germany, they saw a bit of an improvement. A lot of lines looking at the composite number, which is like the overall index, but take it at the ground level, manufacturing and services, they're still both in contraction, although they did improve. Some signs potentially of a little bit of a bounce coming in Germany. In the details, they said that things may have bottomed out and Germany might be turning a corner. It wants to for all the 500 billion in money it's found under the sofa. So it wants to see some results for that. Eurozone numbers coming in thereabouts. Manufacturing coming in unchanged, was expected to go up 2 pips. Services number as well coming in expected at 50 versus 50 expected. So right on the line of expansion. UK data as well showing a little improvement. Manufacturing less crappy at 47.7 and services ticking up a pip over expected to 51.3, 4 up from last month. So maybe some small green shoots there. However, in the details of the UK data, it was noted that job losses had increased at a faster pace than May and that prices were down the most in over 4 years. That's 2 things for the Bank of England or will be important for the Bank of England: lower prices and higher unemployment, which would ideally cement a cut coming at the next meeting. Coming back to data from from Friday, feels like yesterday, we had the Philly Fed manufacturing coming out unchanged over the prior month, -4, a little bit mixed in some of the numbers. CapEx was down, employment was a negative as well versus a positive last month. New orders were lower, prices paid were down as well. So again, a little bit for the Fed there to think about the potential for cutting. They're not going to cut on these numbers, but it's the trend you want to be following. Over in Canada, we had retail sales that came in a little bit worse, but depends on what you look. Positive on the main numbers, but core sales were down 0.3%. We had some RPI, PPI data out from there as well, which was a little bit softer overall. But nothing really for the Bank of Canada to keep an eye on. Their inflation has been a bit up and down, up and down. All this positivity and running into the euro and European assets has been a boon for the consumer confidence in Europe, as you can see there. Fell to minus 15.3 for minus 15.1. Okay, all that data, not too much from US, but the European stuff this morning, particularly Germany, some slight positive signs, but it's hardly a fundamental reason for everyone keep piling into the euro.
Yeah, exactly. The numbers were mixed at best. So as you were saying in our room, the fundamentals may not yet be supportive enough to pile into the euro just on the basis of those data. Yes, Germany is a bit higher, but we're still under the 50 mark there as well. So not yet in expansion apart from the composite. I'm not sure how the manufacturing and services can be under 50 and then the composite still above 50. Am I missing something somewhere? But yeah, the thought or the way the thinking behind piling in or rebalancing into euro is slightly different as well. It's not only Europe, of course, that plays a role, but now risk as well. We still see the euro hold up better than other currencies. If those green shoots, let's say that they are like little sprouts and not yet complete plants of green. Still on the data side, and we know that Europe is not going to go. It's not such a dynamic block as US may be, for instance, where things change much quicker. But yeah, not yet 100% green light to pile or to put all assets in the euro.
No, absolutely. And that's something that's been picked up from some of the ECB members as well. We've had, who was it, Centeno over the weekend saying that Europe needs to get their policy rate into an area where it's going to help the economy. So still some dovish members kicking off over there. Right, coming over to the Fed heads, and we've had Waller, who's thrown his hat in the ring seemingly for the Fed job. He said the Fed is in a position as early as July for rate cuts. He says that the central bank should look through the tariff effects on inflation, and the process of cutting rates should start slow to be sure there are no surprises. And if there was a shock, the Fed could pause. He says the Fed has been on pause for 6 months waiting for an inflation shock that has not arrived. And says the Fed, well, and then he did a little bit of a pushback. So he might have been sucking up to Trump in those comments, but he did a little bit of pushback by saying the Fed has a mandate to worry about unemployment and inflation, not to provide cheap financing for the federal government. Fed's Barkin says there's no need to rush to cut rates. He's not ready to dismiss the inflation risk from tariffs and cannot ignore a spike in inflation if it comes. Says price indexes are still above target. Fed's Daily says concerns on the tariff impact on inflation are not as large as when first announced. So would be considering rate normalization without tariffs. Says the fundamentals of the economy are moving to where a rate cut may be necessary, looking more to autumn rather than July for a possible rate cut. Kay, we're getting a few mixed, well, not mixed messages, but you know, a bit of a step up in strength of opinions about what the Fed should do. Is this getting a bit political now with Trump's attacks on Powell and getting near the time where there are going to be nominations coming up?
In Wallace's case, I think it is, Ryan. I really think it is. It's he's been starting and changing and trying, I think, to position himself. I may be wrong, of course, but it really looks like we've got a few more today. We got our less favorite, perhaps, Foolsby as well tonight. We got Bowman. I'm not sure about all the others, but it does feel to me on the tip of my toes that Waller is a bit playing the political game now. Is he? I'm wondering. Maybe we should research maybe a bit deeper, but he may also be a little closer to everything that's going on in the Trump administration. Not specifically perhaps Trump himself, but around who's gravitating around, maybe even Besant also. But yeah, that does look like it is to me. Bowman, the way that she spoke so far, I don't think there is any politics going on there. Like Goolsby, we don't know really. But we got Kugler as well on the wires, Williams as well on the wires later on. He's a bit of an unknown, I think. I don't think he's going to play these kind of games, but I don't really know about the others.
Yeah, and yeah, we're all going to be talking later on, as you can see there on the calendar. Whether they'll offer us anything we need to know remains to be seen. But yeah, this could get a bit spicy as the months tick down.
Yeah.
Towards when we will start getting some nominations and heavy talk about who's going to replace Powell. So maybe we see a few others putting their hat in the ring with various comments.
Yeah, that is one side, but on the other side, as well, now with what's happened over the weekend, and you're probably, and we're going to be talking about it more in length, but is that not something that may get the Fed to have to think about it? We have seen extremely orderly markets so far, so that is not going to um, to affect them. Yes, the dollar is stronger. Yes, this is a risk of move and stuff, but by no means, and if you look at the biggest currency pair, for instance, by no means there is any disorder, right, in the markets. But could it become a case for them to have to look at something? Probably not going to happen today, but I do think it's maybe something that could become or that could push any decision more closer to where we are now. But okay, just on the tip of my toes, I'm not going to call that Fed should do an emergency cut. By no means, by no means. This we and the markets don't tell us either that it should be needed. So, but I'm just don't want to completely rule out the fact that they will have to look at markets perhaps in the future if the situation over in the Middle East is worsening.
Yeah, definitely, and they'll be keeping a close eye on liquidity, which will be the main thing they'll concentrate on as well as whatever else happens. But yeah, it's busy, but as you say, orderly. Maybe you could look at the yen, dollar yen, and think, well, we're up quite a bit in the last week or so. So maybe that's something to keep that will keep the Ministry of Finance, Bank of Japan, on their toes. It has been grinding up, but this, 145s are now at 148s. It might get them coming out and talking about, the speed of moves and stuff. But it's probably early days for that anyway.
It is too early, Ryan, but it's a counterintuitive move. Yen, historically, traditionally, used to strengthen on geopolitical stress. And now, as we have seen, we have seen a couple of those moves into June, and then when the dollar was weakening, dollar yen was also weakening. But then all of a sudden, last week, everything reversed, and whatever happens, stress or not in the world, yen is weakening. So yeah, you're right. in saying that some antennas may be starting to go up.
Yeah, and half tongue in cheek, but this is yet more uncertainty to keep the Bank of Japan sitting on their hands, and while they wait for their perfect world where there's no uncertainty and higher inflation. We'll see whether they get that or not. Right, let's move on to what's been going on. Okay, so just a quick run of the timelines. We had the League of Losers last week with their meeting. Macron and his merry band of wombats trying to get something done with Iran. It looked like it wasn't going to yield anything, but there was maybe some chinks of light in discussions. A senior Iranian official said that Iran is ready to discuss limitations on enrichment, but then said zero enrichment will undoubtedly be rejected. So nothing came of that meeting, and then basically the US steamed in with Israel into Iran. That was after Trump had said that he'd maybe wait 2 weeks before deciding what to do. He was saying that they've been speaking to Iran and that Iran doesn't want to speak with Europe. Iran wants to speak to the US. Says he thinks Iran was weeks or months away from having a weapon and might support a ceasefire. And maybe it will not be necessary for the US to strike Iran. Well, that obviously didn't last long. And obviously he's not going to broadcast the fact that he's going to join in with any attacks, but he did. And so we got this big move over the weekend where the US, again, keeping it surgical, if we can call it that. We're not talking boots on the ground. We're not talking floods of aircraft flying over and bombing indiscriminately. These are all, targeted attacks, and the same with Israel at the moment. And there may come a point where this isn't going to last. They're going to achieve whatever objectives they set out to do, knock out nuclear facilities and whatnot, and then they may ease off. That's particularly what the US or Trump has indicated at the moment. Sources and various people over there saying that it's not necessarily going to be any continuation. They set out to do what they're going to do, and not even potentially going to look at regime change or anything like that. They want to get Iran back to the table and get a deal sorted rather than engage in any long fought conflict or anything like that. However, obviously we've had the to and fro between all parties, Iran throwing back threat after threat after threat, things like warning about sleeper cell activation in the US if they were attacked. Well, they've been attacked now. So there's been a bit of complacency, I think, at points in this where, sensible head would think, there may not be a big retaliation, and all this is bluster from Iran, obviously mainly to please their population. But you can't rule it out, Kay, that they may do something silly that will obviously see risk taking a massive hit. What do you feel about the situation at the moment? Is this going to be forgotten about in a week's time if things calm down, or are we going to be in this situation for a while?
Okay, I guess, and I'm not going to say unfortunately, but we trade markets and then we need to keep a cool head. But there's a huge difference between markets and what's happening in the real world. To me, it feels like, Rubio said all this talk about waiting and giving a chance was all a diversion, that the strike was actually already planned and stuff like that. But markets tend to forget, or said in a different way, money has to go somewhere. And it's not because there's a war somewhere that money doesn't have to be put to work, or money. Yeah, I mean, investors have cash. You can get back into cash. So investors have money, assets under management, but you can get back into cash. But they will still, at the end of the day, try to make a return on it. So I mean, that's what's happening in markets. What's my feeling is, outside of that, is that nothing is done. I mean, I've got this reaction saying that the Americans went in, they did a big blast, and then Israel is continuing to strike here and there. kind of do the dirty work. And we cannot rule out anything because, yes, Iran is weakened. Yes, so far their supposed allies have also been already before weakened, like the Hezbollah and stuff. But I mean, those Yemeni Houthis, they can stay quiet for a while, and then all of a sudden you'll find a load of boats attacked left, right, and center, or those sleeper cells. Who is going to rule them out? You know, it can be that we have and all of a sudden in all continents, all of a sudden those sleeper cells being awoken and hitting targets left, right, and center, or it can be something where one after the other get an order and then do something silly, but spread over months, if not years. And we always say, I mean, the wounded beast, we never know what kind of reactions they can have, right? There's this IAEA head, the guy from the atomic stuff.
Yeah.
He said that apparently they moved the most dangerous. There was science. Again, nobody knows, and especially not we. But signs that the most dangerous stuff was moved out of the three centers before the attacks. There were even rumors that Grossi, yes, thank you, Hannah. There were even rumors that that they were aware that America was going to move in, and that, I mean, this whole European meeting was kind of a warning as well. I mean, who is going to tell, and who are we to know what's going on, Ryan? I think anything is possible right now. Let's assume in one way that they have been weakened. They have. I think that is safe to say that they have been weakened, but what's possible? Anyone's guess, mate. But we all know, and we have seen it time and time again. And you only have to look at what happens in an oil market, that the market is sanguine and the market is suffering from collective Alzheimer, and oil spikes and then it comes straight back down because there's other stuff going on. So yeah, I mean, in markets, I'm feeling it's extremely orderly, and it's going to take something really bad to dislocate the markets. It seems.
Yeah, let's hope we don't get anything of the sort. I mean, it's it's easy in the cold light of day to join the dots. The stuff that the US dropped, these bunker busting bombs and stuff. Likely, I think that they did that because Israel didn't have any and they weren't getting through to their various targets. So, maybe it just was a little helping hand rather than joining in full scale with this thing. But that's conjecture, and I'm as much an expert on this as everyone else who has to become an expert in 5 minutes.
Exactly. And in the meantime, Ryan, they went in. I mean, that is undeniable. I mean, whether it's a helping hand or full on war declaration, that doesn't matter for Iran on the other side, or their allies also. They are in. That is not. I mean, US can say, oh yeah, we just went in for some quick destruction one night and now we are done. That's not the end of the game. No way.
No, absolutely. But yeah, who knows? So anyway, the one of the threats we got ongoing is what's going to happen or could happen in the Strait of Hormuz, a big transit area for shipping, oil, the whole lot. And as we said last week, we're already hearing a lot of market participants, let's call them that, warning about the threat of that. Is it a possibility? Yes, you can never rule it out. But you have to look at the other side as well. And as we were saying last week on the Flow show, Iran doing something like closing a strait, they risk basically shooting themselves in the foot because it affects all their regional neighbours. China, as Mark in our chat room and others have pointed out, China's a big importer of Iranian oil, so things like that can get affected. So it's not as simple as Iran just saying, "Oh, we're going to shut the Strait of Hormuz, and it's just the US and Israel that's going to be affected. It's a whole big shindig, but that's not to stop market players ramping up oil calls, 130, 150, $200, all that sort of stuff. But it comes down to trade what happens, not what the headlines and fanfare and clickbait lines say. For me, the only real short-term position I had was my Aussie dollar longs. I've closed them up purely not because I don't like the trade, but I don't like the price action. I don't like all this headline risk. So I'd rather be flat, sit on my hands. I'm not in the mood to try and pick tops and bottoms in pairs with all these headlines going on. I'd rather just protect my account, see what goes on, and pick up the pieces after. So I've got a flat book apart from my dollar MEX, which isn't in any danger, touch wood, at this moment. But you have to be careful in these markets, okay? Even just going back to dollar yen, a lot of people trying to short this yesterday evening in this rally, and here we are over 100 pips higher. So you've got to be very careful, okay? This is a time when the price doesn't give a shit for coloured lines on a chart, okay? If this is going to go to 150, it's going to go to 150, and no moving average, cloud, wave, pitchfork, head and shoulders is going to stop it, okay? Yes, it might stop a move on a technical area, but which one are you going to pick? You know, could have stopped at 147, it didn't. Could have stopped at 147.60s, it didn't. Could have stopped up here at 148, which it has. Could that last for a long time, or could it last for 5 minutes before we go through? Who knows? So be very careful. If you want to be trying to do all that, catch knives, pick tops, pick bottoms, then reduce your trade size. Do it so if you do get blown out, you're not going to lose a lot of money. But don't try and be a hero, okay? Yes, we've got volatility. Yes, we've got big moves, and you all want to get a piece of that. But don't do that at the risk of your account, okay? Because it's not a sensible thing to do. Yeah, you could catch a big move. You could easily catch a big move against you as well. So just know the conditions we're in at the moment, okay? So, Kay, looking at the markets at the moment, yeah, we got Aussie dollar yen. It's a bit of a mix. We're seeing the yen weaken generally. We're seeing the dollar strengthen generally. It goes against, you know, the usual MO for stuff. You know, you look at Euro Swiss, dollar Swiss, you know, doing absolutely nothing really. No. But then you look at something like Swiss yen. Let's just bang that one up.
It's ramping higher.
And it's ramping higher. You know, it's having a counter effect. Yeah, it's having a counter effect. So what does one do in this situation? Because, you know, this is another different risk move. You know, oil, right. Yeah, you can explain it. Even gold, I would have thought gold might have been maintaining its bid, but it hasn't. Again, this is just one reason why I don't like this price action I'm seeing, because it's not following the usual rules, the usual trends, and it just makes it difficult to get a handle on it.
Yeah, for what yen is concerned, we see even well, euro yen is a risk pair. Although euro, we can always debate about the role of the euro, because if you look at euro antipodians, for instance, they usually ramp higher, which they are doing now as well on risk off. But no, in the yen's case, I think it comes pretty much down to what we were saying last week as well, and after the Bank of Japan and the MOF decision government MOF decision to reduce those bond issuances. It's given the market a month and a half time to not have to buy the yen, but then risk has been it has been traded in different ways of late, right? And yen has not always followed the risk pattern, but now it is a surprise to me as well. You know, I mean, I'm a little bullish euro yen, but I cut my euro yen long before the weekend just in case something was happening. Then yesterday, Things happened, and I left a bit, like about 1% below the market. I said, in case the market is now buying yen on risk off, I want to be long euro yen again. But here we are, 200 points higher. It's
Well, it looked initially like it was going to be a bit of a yen bid story.
that
This
first,
opened down.
yeah, that first hour, but then completely turned around. I think the market is in general, perhaps the speculators. I'm not talking about anyone else, but the speculators are probably still a bit long yen, and always trying to counter the lower yen moves. Higher dollar yen, they try to sell the rallies. And there's a lot more people trying to sell rallies than buying dips in dollar or cross yen, right? And I think that's already one of the reasons. Then the other reason is what I mentioned just before, the Bank of Japan and the MOF, and then the change in pattern about how sorry, how the market is trading risk, or how it is immune, or the shift in different instruments, how to trade risk. Like for instance, Aussie and Kiwi, Norwegian kroner, Swedish kroner, they trade like, maybe even the Canadian dollar trade closer to risk now than stuff like the yen or even the Swiss franc. Even although the Swiss franc is a bit stronger, it is not nowhere as strong as we could have imagined after prior risk events. So we have to go with the flow if you want to trade it, or we have to wait for certain correlations to come back, because for the time being those correlations are random, and especially in yen. I think the market was pretty long yen, and we could stop dead at one stage. Maybe we could even have imagine that we hit $150 and we may have the MOF come out and say that they are starting to really pay attention to what's happening in the yen, and then those who want to play yen are going to be comforted again, and trying to play it again, especially if by then risk is not doing better in general. I find it very difficult to trade, but I'm not. The one thing that I'm not going to do is counter trade this move, because it is not what we are used to see normally in risk. So it could go a lot further than what we may think. I'd rather let the market go back to what it usually does, and then on the basis of what happened last week, counter trade that one. That I would do, unless
Yeah,
the world explodes, of course. But then we just close our screens and try to hide.
yeah, exactly. I think that's it. And the problem is we keep jumping from pan to pan to pan. You say we were saying we go back to trading the fundamentals. We were saying that right at the start. When everything else kicks off, we don't seem to ever get back to trading the fundamentals because something
Oh,
else keeps cropping up.
yeah,
And then it's almost you got to think, right, well, this is what we were trading 2 months ago. Where are we going to be if we're over this hump? Are we going to get back to that, or has something changed? Yeah, it just makes it a bit difficult at the
I
moment. And in those situations, I don't want to be risking a lot on anything I do.
Yeah, I think a lot of positioning in certain stuff, and you were talking about gold. I also updated in that sense this morning in our room. I said gold also looks like there is too much positioning right now. People have been constantly buying gold for various reasons, not only because of, as I call it, the hedge against anything bad that can happen, but also on the basis of potential mishaps in the U.S. fiscal situation, the rest of the world's fiscal situation, which is not really going well at all. And then you add risk to that. But the market has been buying gold for a year and a half, 2 years, right? And now we are seeing this kind of move that we had in gold. You go up 40, $50, but it's getting sold into, because I think the market, and then especially the short to medium term market, they have the position. Okay, so there's a bit of, it's not headline fatigue. I think it is books getting managed, because all right, we have like a ton of gold in our books, but is it really useful to keep all of it? So I mean, yeah, if it goes up $50, let's get rid of some. This is perhaps a period where the positions are getting slowly but surely lightened up, and then if something really bad happens, the next move is for 4,000, right? But right now we have to think a bit maybe in oil terms. Get the spike and then it comes off, but less than gold, less than oil, of course. But it's kind of getting a bit comparable, those markets. So maybe that's where we rather have to look at correlations also happening. But yeah, same as you. I was surprised that we didn't even reach 3,400 in gold, and we are all already back to relatively neutral on the day.
Yeah,
But
absolutely.
sorry.
Yeah, no, same. Yeah, I agree.
It's a global thing. It's a global thing that's going on. Yes, there is but risk off is much more. I think the market was already diversifying into euro before everything happened, and we know that euro versus some currencies, if risk off is traded, the euro tends to do better, and that's what we get now in a lot of those pairs. Look at what's happening in euros. Look at what's happening in euro CAD, in euro Kiwi, in general. I mean, it's actually the euro fulfilling that risk off sentiment now.
Yeah, absolutely. That's how markets can change. And if you know that, then you know which side you need to be on, or if you're going to fight it, you've got to know which way is the stronger side. You know, if you want to be short in the euro in all these rallies, you know you're going against trends. You know you're going against strong moves. So you fight it with a little less risk. So if you're wrong, then fine, you don't lose a lot. On the other side, if you want to be long, you've got the support that we've been rallying a long time. You know the buy, so you're trading with the buy. So maybe you can risk a little bit more trying to pick up the dips and everything. But everyone wants a dip until they get a big one, and then no one wants it anymore because they all get too scared. But, that's the way markets work. Right, quick couple for me. I was mentioning about Aussie dollar. So 64.40 was my big line. We smashed through there. It's actually a bit of resistance. We opened below it Sunday night, 64.41, if I'm not mistaken, and it's been south ever since. We looked like we were bouncing off the 64, but that's gone now as well. So again, does it mean that the Aussies finish going up? Not necessarily, but for now it's stopped going up, and now you need to look at the downside. So now everyone who wanted a dip might be getting it, but do you want it if we're going to continue to get these headlines? So that's why I thought, no, I've had enough. I'm getting out of the position. Don't care if I'm taking a bit of a loss. I want to be flat. I don't want to be, it's going to come back. It's going to come back, and then find out I'm another 100 pips lower before I get out the trade. So I'm flat. Sometimes I do that. If I don't like it, get out, worry about it afterwards. $MEX, that's in the similar situation. You know, we were talking about this breaking down. It's all creeping lower, small levels, all respectful and nice when it's quiet. Then as soon as you get a big headline, boom, we're kicking off and going through the levels like they didn't even matter. So this one looks like the 19 has made a decision. That was on Friday. We've had a rally up. It's got through a lot of the levels. This is the main one here, 1925, 24, 25. We had a little poke, couldn't hold it. We're coming back down. We have had a little bounce off that old level. So the market's not ready to give it all back up. And this is what happens sometimes. You have a down move, you have a bit of a reversal, then you have to do all the hard work again in getting through these levels. But right now, sitting here, I wouldn't be surprised if this one continues to mooch up if this risk mood continues. And if it does abate, then if you're short like me, okay, you still short this one?
No, actually, my last I already reduced greatly, but my last tiny bit has been taken out actually Friday evening before even the weekend. That now somewhere I said 1910, really short term. If it goes, I'm gone. So no, I got taken out around 1913. Just bang the pips and think about it again later. I haven't given up on it. I think anywhere in the Yeah, those 1930s, 40s, maybe try it again. But I'm just going to let the market do its thing for a while and then perhaps get back in. It was tiny anyway, so it wasn't going
Yeah,
to make me an awful lot either if it goes back down. So I'm rather waiting and then getting back into a bit of a more decent kind of position, a decent amount in amount terms. But let the market do its thing a little bit. But yeah, I mean, I still think that overall, not a lot has changed, but we need to let risk do its thing a little bit, and also considerations now. What is Trump going to be starting to say and everything? And I don't know. We haven't heard much about real things about Mexico, US. So perhaps a little bit more coming, and then we will see what there is to do.
yeah, yeah. And I think, yeah, if all this stuff abates, it'll be interesting to see what happens on the downside. I think
I
if we
think
get a
it goes
move
back
from
down.
this one,
I think if everything quiets down, let's say everything quiets down, the
yeah,
dollar mix is going back down, I reckon.
I think so. But I think what happens at this 19 is going to be really important if we get another test down there. If it holds that test, even while we're seeing, risk on or whatever, that might be a bit of an indication that we found a bit of a bottom coming off the top of this little double bottom here. So that 19 level for me is going to be a real key one if we get down there again. Right, mate, I'm going to just looking at the clock. I'm going to whack it over to
Mm,
you a few.
yeah. Okay. Looking at those markets, the main thing, and we have been speaking about all those things already before, is to try not to get too confused about what you do and keep it simple. Yeah, I know I've got quite a few lines on my charts, but I usually manage to look through them. What's interesting here is that we've had a bit of a build-up of a trend line in gold, and it is holding, it's trying to hold. But again, we're in this situation as we also see. We had this big spike up in risk, and I mean spike up against the market needed the hedge, and we're coming back. And now lately, as I already said last week, we're trying to consolidate. I think at least the short to medium term market may just want to lighten the positions up a little bit. By no means is this a bearish reversal or so. I mean, look at what the way we have traded over the past years. I still think the global bias is that gold and metals in general are probably going to remain bid, perhaps even throughout the whole course of the year. But as I also said, we need to be sometimes a bit patient, let the market do its thing. We The trend line came in, well, now it's rising a bit, but then it came in around prior bottoms as well. We've identified this 33.40, so I think that's an interesting one to keep an eye on, 33.40. And then if it goes down, we may see a bit of an extra let go of positions, but really the big levels are waiting here for one, and then even lower down. So in the short term, I just think it's people a bit like in the oil market. Okay, yeah, we have this spike higher, but then we need to let some go because we never know if it quiets down. We could be trading 3,200 again, etc., etc. It's just the ultra long terms. They won't be bothered by any of those moves. They will still be sitting quite comfortably long, and may start to only panic if, well, panic is even a big word, if we get back below 3,100 or so. But in the meantime, I'm not too much of a deep buyer right now because I'm not 100% sure. Silver also corrected quite a bit, but they did it before the weekend event, and actually stabilizing right here. We are still comfortably above the big break level. Okay, um, I could even go down to 35, 34.85, even 34.90 before we could talk about a reversal. And even in the long term, We are still above like 30, 31, etc. But even in the medium term, 35 is going to be the line, give and take 15 cents either way. It's going to be everything happening around 34.85, 35.15 here. And for as long as we're above, nothing has changed. Okay, for as long as we're above, nothing has changed. And to me, we are still in a market that could be, and I need to go back onto the much longer one, right? We're still in a market that, and we can find this 35 here again as well. And we're still in a market that is probably going to look over time to move up more into the 40s or so in silver. But also a little bit patient with everything that's going on. Quick one on the cable. We had a dip. We didn't have it on the Sunday Open, but we had just a brief dip below this 33.85, which was the range that we are trying to form, 33.85, 35.15. But we are back above shyly. We're trading around. It's going to be interesting on the day, this one, whether we close above or below, I reckon. If we close below, we could be back to somewhere 133, 133 and a quarter. For the it's less buoyant or less supported than euro, for instance, because as we were talking about that with Ryan as well, this euro sterling is gradually pushing higher, and I guess it's more a factor of the euro really than the sterling at play here, because as we were saying, we saw all those euro crosses. And by the way, since everybody like us, you guys are watching the markets, recall what's happened on Friday fixing. The London fixing on Friday was clearly a euro cross buyer fixing. Okay, so that means that the rebalancing, the redistribution of money, the yeah, what's happening in the euro, this rebalancing partially into euros, it's not done. It doesn't seem done. Of course, risk is helping those particular euro pairs like euro sterling, euro Aussie, euro Kiwi, as I already told. But it's a euro thing here rather than a sterling thing, in my opinion. What is going on? And so obviously cable will also be driven by euro sterling moves, and we saw it on Friday actually into 4 p.m. Cable coming heavy, but euro was quite bid at the same time. But yeah, so keep an eye on this 33.85. 34.40, if we get back above, probably going to have a retest of the top end. But in current context, to start the week, I would be surprised if we take out highs. That is probably not on the cards unless this market turns around and says like, well, we know what we usually do on risk events, and that is to buy dollars as safe haven. But the picture has changed a little bit because it's Trump or so, and now we are going to instead massacre the dollar. I it's not now, but I'm not completely ruling that possibility out either. But yeah, keep an eye on 33.85 for the rest of the day. Euro dollar, in sympathy with the rest of the dollar pairs coming off, but then we already had the bounce above 115. The euro crosses our bid. I think euro dollar is going to be less affected by dollar buying if the market continues to buy dollars on risk off because of those crosses and because of this reallocation of money going on. So on the day, I would say like I wouldn't I wouldn't think that euro goes negative unless we start to break below 114.15.25. 114.15.25 is my level. It's a bit of a support on a trend line, but it is a multi retracement level zone as well. It is, as we can see here, close to the prior move as well. 114.10 has played, 114.20 has played a role every time we got there or thereabout. Okay, so this is my main support on the day, 114.15.25. Okay, and above there, I'm not sure that there is a potential to go there. to go above there or to break above in current context, but 115.30.35 and 115.75 above. And with that, Ryan, looking at the clock, I'm giving it back to you, mate.
Thank you very much, mate. Great stuff as always. I hadn't even looked at the calendar this week. It's been so busy. But look at that tomorrow. Anyway, it's PMI week this week. So that's first and foremost. On that note, we'll call it a day. Have a great day, everybody. And we'll catch you tomorrow. Take care.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.